Hello and welcome back to the Market Bar. Today, we're talking about Bitcoin's latest price drop and whether this could be a golden opportunity to buy the dip or if we should expect further volatility. Bitcoin has just seen a sharp 7.1% decline, dropping to $89,000. It's the lowest level in the past 3 months. This has raised concerns among investors, with many wondering whether this marks the beginning of a larger correction or if it's just a temporary setback before another major rally. In this video, we'll analyse why Bitcoin has dropped, the major factors influencing the market right now, and whether this dip presents a strong buying opportunity based on historical data and expert projections. Before we get into it, let's talk about security. If you're investing in Bitcoin or any other cryptocurrency, you need to protect your digital assets. Ledger hardware wallets are one of the safest ways to store your crypto, keeping it secure from hacks, exchange failures, and cyber threats. If you want to safeguard your investments, check out Ledger wallets using the link in the description. Now, let's break down what's happening with Bitcoin. Bitcoin's recent drop to $89,000 has been triggered by a mix of factors, including a major crypto security breach, geopolitical tensions, and economic uncertainty. One of the biggest reasons behind this decline is the massive security breach on Bybit, a Dubai-based crypto exchange where hackers stole $1.7 billion worth of Ethereum. This is one of the largest crypto heists in history, and it has shaken investor confidence. When such large-scale hacks happen, traders often rush to withdraw funds, leading to increased selling pressure across the market. Geopolitical tensions are also playing a role. The US government recently imposed new tariffs on imports from China, Mexico, and Canada, causing economic uncertainty. Historically, Bitcoin has sometimes acted as a hedge against inflation and financial instability. But at the same time, macroeconomic factors like interest rates and tariffs can impact investor sentiment, making people hesitant to enter riskier assets like crypto. Regulatory concerns have also added to the uncertainty. While there have been positive developments, such as the SEC dropping its lawsuit against Coinbase, the overall regulatory landscape remains unclear. When governments and regulators send mixed signals about cryptocurrency, it makes both retail and institutional investors more cautious about entering or increasing their positions. All of these factors have contributed to Bitcoin's price drop. But the big question remains, is this just short-term noise, or is Bitcoin setting up for a bigger rally? Whenever Bitcoin experiences a sharp decline, investors and traders start debating whether it's time to buy the dip or wait for further corrections. To answer this question, let's take a look at historical data and how Bitcoin has performed after similar price drops in the past. One of the most notable historical trends is that Bitcoin has a strong record of bouncing back after sharp declines. In 2021, Bitcoin fell from $63,000 to $30,000, a staggering 52% drop, only to recover within a few months and hit an all-time high of $69,000 later that year. Another example was in March 2020 when Bitcoin crashed to $3,800 due to the global market panic caused by COVID-19. Many thought Bitcoin was finished, but instead, that drop turned out to be one of the best buying opportunities in Bitcoin's history. Just 18 months later, Bitcoin had surged to its all-time high of nearly $69,000, delivering massive returns for those who bought the dip. Even in 2017, Bitcoin saw a 30% drop multiple times during its bull run, only to recover and continue climbing higher. Bitcoin's past cycles show that these kinds of sharp price movements are normal in crypto markets. Right now, some analysts believe that Bitcoin could see further downside before resuming an uptrend. However, others like Anthony Scaramucci believe that Bitcoin could still reach $200,000 by the end of 2025 due to increasing institutional adoption and favorable market conditions. There are several reasons why this dip could present a strong buying opportunity, especially for long-term investors. First, institutional adoption of Bitcoin is growing faster than ever. Major financial institutions, hedge funds, and publicly traded companies continue to increase their Bitcoin holdings. This provides a level of price support that Bitcoin has not had in previous cycles. Second, Bitcoin supply is shrinking. Every 4 years, Bitcoin undergoes a halving, reducing the amount of Bitcoin that miners receive as a reward for validating transactions. Historically, Bitcoin halvings have been followed by major price rallies, as reduced supply leads to higher demand and price appreciation. Third, Bitcoin ETFs are driving massive inflows into the crypto market. The approval of multiple Bitcoin ETFs has made it easier for institutional and retail investors to gain exposure to Bitcoin without directly holding it. This is a game changer for the market, as it increases liquidity and accessibility for traditional investors. Finally, long-term holders are still accumulating Bitcoin. Data from on-chain analytics shows that whales and long-term investors are not panic selling, which is usually a bullish sign. Historically, when long-term holders continue to accumulate despite price drops, it has often signaled a strong recovery ahead. So, should you buy the dip? I'm not a financial advisor, and this is not financial advice. While no investment is without risk, and Bitcoin could see more volatility in the short term, history suggests that sharp price declines have often led to major buying opportunities. For long-term investors, dollar cost averaging remains one of the best strategies. Instead of trying to time the bottom, DCA involves buying small amounts of Bitcoin at regular intervals to average out the cost over time. This strategy removes the stress of short-term price fluctuations and allows investors to build their Bitcoin holdings steadily. If you're thinking about buying Bitcoin at these levels, it's important to consider your risk tolerance and investment timeline. Crypto markets are highly volatile, and short-term price swings can be intense. However, if you believe in Bitcoin's long-term potential and have a multi-year investment horizon, this could be a great opportunity to accumulate more Bitcoin at a lower price. Bitcoin's recent drop to $89,000 has sparked fear in the market, but history has shown us that dips like this have often led to massive buying opportunities. The combination of institutional adoption, increasing ETF inflows, and long-term holder accumulation suggests that Bitcoin's long-term outlook still remains strong. If you're thinking about buying the dip, make sure you secure your investments properly. Keeping your Bitcoin on an exchange can be risky, as hacks and security breaches are still common. That's why I highly recommend using a Ledger hardware wallet to keep your crypto safe. Ledger wallets protect your Bitcoin from online threats, giving you full control over your assets. Check out the link in the description to get yours today. So, will I be buying the dip? Yes, I am buying the dip, but that's my own personal strategy. What's yours? What do you think? Is now the time to buy the dip, or are we headed for more downside? Let me know your thoughts in the comments below. If you enjoyed this video, hit the like button and subscribe to The Market Bar for more in-depth analysis on crypto and investing. Thanks for watching, and I'll see you next time on The Market Bar.